You probably already know this, but being a millionaire is the new middle class. So the new middle class is being a millionaire. Why? Because being a millionaire, 30, 40, 50 years ago was pretty significant. Our money had value, the dollar had value. $1 million could go a long way. Obviously, today, $1 million doesn't go that far. And if you look at the expansion of the real estate markets, especially along the coastlines and in certain parts of the US, California is a perfect example. You can buy a little shack for $1 million, right? So inflation, which has been out of control for decades now, for at least a decade, inflation is just the expansion of the reduction of our dollar's value, right? So this is why in 2026, moving forward, inflation is going to be a key theme. It's been a key theme with the Federal Reserve. There's been a lot of arguments and discussion about raising the rate, cutting the rate. And basically, what happened was 2008 crash. There was quantitative easing introduced, which means the government started printing money, started making cash available because there was such a shortage of cash. Bunch of accounts were wiped out, equity was wiped out, housing prices, putting in houses were wiped out. And so we had this long period from about 2010, 2011, all the way up through 2020, where there was a consistent and persistent printing of money, and the rates were very low, which meant basically that there's free money. The banks can lend, everyone was getting money, money was accessible to anyone, and because we wanted to simulate the economy, right? So now printing money, free money, it was a huge wealth transfer. You guys might have heard of, in 2020 and beyond, they were calling it the Great Reset, but this was really happening post 2008 crash, where quantitative easing, money printing, low rates, unprecedented free money was available in that 10-year span about. And the Fed went on for so long with rates so low. Eventually, I think it was, somewhere along 2016, 2017, the Fed actually bumped the rate. They finally bumped up the rate. I think it was like quarter point, half a point, something like that. And, the bank started freaking out. And, but basically what they said is, hey guys, pump the brakes. We've been printing too much money. Now, of course, we still have historically relatively low rates. And, so money is plentiful. And when money, cash is plentiful, the inflation rate starts to skyrocket. It's been out of control, right? So there's been this long talk about when are we going to raise the rates? The Fed has been raising the rates, little incremental rate raises here and there, bumping the rate a little bit. Really, they should have been raising the rates a while back, and they should have done more significant raises, and they haven't. So now we have a situation where the economy is stagnating and we are still seeing rampant inflation. So this is a stagflation scenario. And what this means is that the value of our dollar is worth a lot less, and a lot more people have money, and there's stagnating demand, right? So the basis point I'm going to use for being truly wealthy is being in the 1%. In the 1% in America, I think it's somewhere around 12, 13, 14 million. You need a net worth of 12 to 14 million dollars to be considered part of the 1%, right? So really that I would say that's where actual wealth starts in a monetary sense, right? So if you're looking at what is your net worth, how are you a wealthy individual financially, then that's kind of where it starts. So that's why I say becoming a billionaire is really the new middle class, right? If you're worth a million, 2 million, 3 million, you're starting out. You're in the middle class. It's no longer the same as being a millionaire, 30, 40, 50 years ago. So what this means is that more people are becoming millionaires every day. Inflation is increasing. So there is an uptake in the amount of millionaires that are being created. But then again, what is the actual value of being a millionaire? Well, it's related to this inflationary scenario where the money is worth less. It doesn't go as far as it used to go. So everybody needs more money in order to survive. So the natural outcome of that is that for the middle class is that they need to make more millionaires. But then the problem is you become a millionaire and you're not really financially wealthy in comparison to the actual 1% wealthy who are maintain that net worth above 12, 13, 14 million, right? And then to be in the 1% of the 1%, Google it, do the math. I'm sure it's, somewhere in the realm of 50 plus million as a net worth. Now, the thing that people don't understand when it comes to your net worth, first of all, you should not be looking so much at how much cash you have in the bank as your net worth. That's your balance sheet, how many assets you own, what is the income that these assets produce, what is your passive income. Those are the statistics that if you want to become financially wealthy, that you should be following. Not the inflow and outflow of cash. It's your taxable annual income. You live year to year on a financial basis. If you run businesses, sometimes it's quarter to quarter because you're doing quarterly taxes or whatever. But the point is that average person or a poor person is living day to day. They're living hand to mouth. The money is up, then it's down, and their emotion is attached to that. To that roller coaster of needing money, getting money, spending money, and it seems like there's no way out of that trap, right? So the first, so one thing that you have to do is really start looking at your net worth, look at your assets, look at your cash flow, right? This is what becomes important. So, you know, for all the new middle class millionaires out there, it's like, you'll hear people say all sorts of things like, I don't need to be rich to be happy. Okay, great. I'm not going to dispute that fact for some people. Not everybody needs to be rich. In fact, in order for the economy to exist the way that it does, really less people have to be rich than to be dependent on the system, dependent on a paycheck, dependent on some sort of subsidy or something like that, right? So, uh, but when you're looking at the middle class, the problem is that when the middle class starts to shrink, then you have a bigger gap between the wealthy and the poor, and it's usually never a good scenario, right? So here I'm talking about the middle class millionaires. When you're a middle class millionaire, it's kind of like you're kind of in financial limbo, right? You're not truly financially wealthy, but you're also not poor. So you have this ability to participate in some aspects of investing, buying assets, arbitrage, things like that. But you're not really participating on the level that the big boys are playing, right? Like that they're truly wealthy or the big funds are playing at. So it's kind of an interesting scenario to look at. Of course, it's better to be a millionaire than to not be a millionaire. But if we're looking at what does it mean to be a millionaire, like a 1 to 5 million net worth, a 1 to 5 million net worth in 2026, it is basically the equivalent of the middle class 50 years ago, because middle class, they have access to everything they need. They have access to, they have a good house, they have liabilities, they have a car, they have, most of the time that income is coming from a job. But the thing that really separates poor people from wealthy people that the middle class needs to understand, especially the new middle class, if you're a middle class millionaire, is the ownership and stewardship of assets along with arbitrage. Now, the thing that's great about arbitrage is that typically, you know, there's no easy way to make money, right? But arbitrage is basically leverage, right? When you own assets, it's leverage. When you arbitrage, it's leverage. So the truly wealthy financially are just, they don't work for money. They're living off of leverage and they are managing their leverage. So to get into that wealthy category from being a middle class millionaire, for example, you really have to look at how do you maximize your cash flow through the purchasing of assets? How do you maximize your profit through the arbitrage of assets, such as, and this kind of gets into the high income skills, right? Like you have to be developing high income skills. Right now, good high income skills are, of course, trading, that's arbitrage, stock options, Forex, different types of financial trading, and of course, buying, owning, and creating assets. So these are the things that separate the poor from the wealthy. And so somebody who is like started on that journey, what you need to do is you need to double down on your strategy. As I was mentioning, the high income skills like wholesaling real estate, trading, different forms of arbitrage, buying, owning, creating assets. This is the way that whether you're poor or you're a middle class millionaire, it's the only way up to the wealthy category, right? So if you're in the poor category and you want to get to wealthy, you're basically, your next step is becoming a middle class millionaire. The only way to do that, building a business, arbitrage, creating assets. When I say building a business, that's just another form of creating an asset, right? Because you have expenses, you have cash flow, you have positive cash flow. So, but this is also a warning against, like, thinking that you've made it. Once you've achieved that, there's a lot of new millionaires. I saw some statistic. It was like over a thousand. It was like over 1,000 millionaires are created every day in America in 2025 last year. And so, when you look at this, it's like, that's really great. It's great that people are becoming millionaires, except what we talked about before, being a millionaire is now kind of that middle class range. So when you get out of the poor category into the middle class category as a millionaire, what do you do with that capital? Well, asset prices have inflated too. So it's harder to buy better assets that produce more cash flow without having the expenses, without having the expertise. So if you're kind of in that limbo, right, you have to look at how do you maximize your skill set, whether it's wholesaling real estate or trading or investing or building businesses. How do you maximize your output? How do you maximize your profit? How do you maximize that skill set? And uh, scaling, at that point, scaling is really important, right? So you have to find what works for you, what works for your investor IQ, like the way that you are psychologically set up to be an investor, the opportunities that are available to you, your skill sets outside of the high income skill sets that allow you to actually take that form of investing or high income skill to the next level. And we need to focus on that, right? Because the reason I'm making this video is to basically point out the fact that if you're poor or you're a middle class millionaire and you desire financial freedom, I've talked a lot about this before. Financial freedom is different from wealth, right? Financial freedom is having positive cash flow over your living expenses to the point where it's passive and you no longer have to work for money. But if you're in that position, or really if you're in any of these positions, the goal is to become wealthy, right? So once you're financially free, typically the goal would be to become more wealthy or to increase the amount of free cash flow so your financial freedom can expand. And so part of that process is understanding what the wealthy do with money, how they manage money, how they look at it, how they look at their investing and their skill sets. And that's where it's doubling down on the profit, on the skill set, whatever that high income skill is, doubling down on what it is that works for you and really moving towards that 15 million plus target on a net worth basis, right? You know, there's something about Gen Z that, like, Gen Z, like, they're skeptical about everything, but they're also more resourceful than a lot of other generations, right? So they'll question everything. They'll Google it to verify it, and if they don't know something, they know they have the resources to go figure out how to do it. The problem with that is that when you listen to somebody who has information that has years of experience, typically you'll get further faster. And a lot of times, what I see with this new generation with Gen Zs is that they don't recognize the value of listening to somebody who has the experience, who has done it, who can actually get them to the next level faster. And it's kind of a tragic uh it's kind of a tragic failure on the part of this generation, because you could see people becoming multimillionaires very quickly if they would listen. But a lot of people don't want to listen. A lot of people seem to have, they think they have it figured out, or, you know, it's like, we're going to go verify it on Google and Google's going to tell me how to do it. I'm going to check GPT how to get rich. Well, that's great, but it's not really the same as having real world knowledge and experience. So at the end of the day, like, you should always be curious, lean into what inspires you, lean into what you enjoy doing, but also know thyself, right? Know what you're good at, know what skills that you want to develop, try different things out, try different high income skills, different strategies, figure out what works for you and what doesn't, and don't be afraid to fail. One of the things that makes the most sense to me that I understand in my experience is that the person who is successful has failed way more than the average person has tried. So don't be afraid to try things. Don't be afraid to fail. At the same time, have a very clear purpose and goal and outcome. And in the sense of financial freedom and your wealth, you should have your numbers. You should understand and know your numbers. So the first number to know is that $15 million is uh, the net worth in which 1% starts. So the wealthiest 1% starts at $15 million, right? So if you're a millionaire, middle class millionaire, you're below that 15 million. And the question you should be asking is, what's going to get me over the edge to that 15 million? Because the strategies that you use to get to the, 2 or 3 million is not the same that's going to get you to the 15 plus, right? So these are the things that we have to think about. The other thing you have to look at is, if you're in real estate and you have tenants, you understand this, because you understand the psychology of people who are living the psychology of people who are living month to month or who are operating in the poverty economy, so to speak. Like, it's such a different psychology. It's such a different mindset. It's a lot more restrictive. Now, I'm not saying like the financial system is set up in a way where it does victimize people. I like, you have to sympathize with people who are on the wrong side of the economy, right? Because it's really freaking hard. Once if you're poor, it's really hard. It's really hard to get out of that pit. But at the same time, if you have skill sets, if you're competent, if you're smart, and you can work yourself out of the lowest rung of that side of things. And there's so many opportunities and ways to get rich, to get out of the poor sector into that middle class millionaire area, that it's not always easy to feel sorry for everybody, because we all have the same opportunities. I'm not talking about people who are born with money and born with wealth. I'm talking about anyone who is entering life from a poor, average, middle class family, right? There's only so many ways to get rich. And so but for those people, it's like we're really all on the same playing field. Because if you look at the actual wealth gap, it's so much bigger than people realize. Like, the 1% of the 1% have such an astronomical amount of capital and wealth that even the bottom rung of the 1% couldn't even fathom that level of money, right? So it's all relative. At the end of the day, we're optimizing for lifestyle, freedom, and having a good life, right? Being able to have good health, being able to have good relationships. So those things are more important than money. We've talked about that. But at the end of the day, money is still important, right? Anyone that says money isn't important, send it to me. I'll take it, right? So that's really what it is. Middle class is the new millionaire, and that's okay. But how do you get to the 1%? You really have to look at what got you to becoming a millionaire, and start to refine, change your strategy, change your approach, figure out something that's scalable, and that's what's going to take you to the next level.